Have you back? Now, many retirees are surprised when they receive their pension income that they still pay tax. And while there are ways to reduce your tax in retirement, it does require some planning. Personal finance columnist Maya Fisher-French joins us now to give us some clarity on this. Maya, good morning to you. So that's the question. Why do we still pay income tax once we have retired?
This is a question my mother asks me all the time.
Yeah.
And the bottom line is that if you earn an income in South Africa, it will be taxed, irrespective of how old you are or where the income comes from. So as a retiree, you may be earning an income from an annuity, from property you're renting out, part-time work maybe, or even interest that you earn. And that all gets added to your taxable income. So, in terms of retirement products, your RAs, your pension funds, we have a deferred taxation system in South Africa. So you get the tax break when you contribute, and everything that grows in that fund is tax-free. But when you draw on it, it becomes income and it's taxable. Probably the only good news that I have on that side is that at retirement, you do start getting some tax exemptions. So first of all, you can draw up to 500,000 Rand from your retirement fund, tax exempt. If you draw more than that, you're going to be paying tax. And then in terms of the monthly income, that is taxed based on your tax tables. But the good news is when you turn 65 and then again at the age of 75, you actually receive a higher tax rebate, which effectively lowers your the amount of tax that you pay. So over time, as you get a little bit older, try not to retire before 65, because then you're going to be paying that full amount of tax on your income.
Absolutely. And just briefly before I let you go, then, what other taxes should retirees be aware of?
So the other ones that I think catch people out is not only that annuity income is taxable, but also their interest from cash. And a lot of retirees sit with cash investments. So if you are under 65, perhaps you retire at 60, any interest that you earn above 23,800 a year is added to your taxable income. So, if you're getting a return of about 5%, if you're holding more than 450,000 Rand in cash, that's going to be possibly taxed. But again, at 65, this increases to 34,500 Rand. So you're able to earn a little bit more interest before it's added to your taxable income. And also at 65, you get additional medical tax credits. Very important for retirees to do tax returns and make sure that they're benefiting from those. But I just thought quickly, I should just also let this book landed on my desk yesterday, which I thought was actually very useful. I had a quick look at it, 50 pages, how to get a refund
Please
for
raise it up, Maya.
Absolutely worth it.
Yeah, there we go. I can see it now. Of course, make sure that you get the book. I think we need to acquaint myself. There we go. With All SARS Matters, how to get a SARS refund for retirees. Now, that's a good one to get. Of course, any elderly person that you know, whether it's a family member or a loved one. And thanks, Maya, for the plug. We really appreciate it. Personal finance columnist Maya Fisher-French talking to us this morning about how to make smart money decisions, even for retirees, Gavin.
Yeah. Start making them now, of course, because that's going to affect you in years to come. We need to get out of here. So